Hello, welcome to the last module of the course Public Sector Accounting. And we'll be looking into some contemporary issues and emerging trends in public sector. And with that, we will look into e-government and digital accounting system briefly. We'll also briefly look into sustainability and the environmental reporting in public sector. We'll also look into ethics, professionalism in public sector, and lastly, we've been talking about transparency, accountability, and we will briefly look into that. Transparency, accountability, and anti-corruption framework. And public sector accounting is being reshaped by key forces, including technological advancements, global sustainability agendas, demand for ethical governance and transparency. And that's why we will look at the various key issues that are needed to be known, as said in the previous slide. And this is to equip you with the knowledge to navigate modern public financial management. What is e-government? What is e-government? It is actually the use of information ICT technology to deliver services, managing resources, and interact with citizens. And it is a shift from paper-based to automated financial management. So the e-government, which is electronic government and digital accounting system, is said to be the use of information and communication technology to deliver services, to manage resources, and also to interact with citizens. And it is a shift from paper-based. So it takes away the use of paper to be able to provide financial data or information onto the automated financial management. And key system that are very important to know is the integrated financial management information system, and then the ERP. And what are the features of this key system? The first one is that they are automated. The second is they allow for real-time reporting. Also, it ensures data integration and it enhanced security. These are features of these systems, and the benefit of them, of using the e-government and digital accounting system, is that it improves efficiency and cost. It allows for cost saving. Also, it enhances transparency and accountability, and it ensures better data-driven decision making. It also has its challenges to include high initial costs, skill gap, cybersecurity risk, and resistance to change. Looking at the aspect of sustainability and environmental reporting. Sustainability in the public sector refers to the responsible management of resources in a way that meets current societal need without compromising the ability of future generations to meet their own needs. It encompasses three interrelated dimensions, and the first one is economic sustainability, the second is environmental sustainability, and the third is the social sustainability. For economic sustainability, it's ensuring that government spending, the revenue generation, and financial management practice support long-term fiscal stability. And for environmental sustainability, it is the managing of natural resources, reduction of pollution, and minimizing of ecological impact of public projects and policies. And lastly is the social sustainability, which deals with the promoting of equity, inclusiveness, and social well-being through government policies and programs. Having an understanding of the sustainability, we need to also look at the environmental reporting. And environmental reporting involves the disclosure of information on government activities that impact the natural environment, including resource consumption, emission, waste, and environmental liability. And why is this important? The first is that it enhances accountability for ecological impact. It supports achievement of sustainable development goals. It also involves better policy and improves public confidence. And the framework for this are the GRI, the integrated reporting, and the IPSAS guidance. These are the framework that are available for environmental reporting. The next issue to be looked into is the ethical and professionalism in public finance. And this deals with ethics. Ethics and professionalism are fundamental pillars of effective public sector financial management. And why are they fundamental? They are because public fund belongs to the citizens, and their management requires the highest integrity and accountability. Ethics refers to a set of moral principles or values that guides the behavior of individuals and institutions. And key principles of ethics in public finance include integrity, which means ensuring honesty and consistency in financial reporting, decision-making, and resource management. Another is transparency, which means making financial information and processes accessible to oversight bodies, stakeholders, and the public. Another key principle is accountability, that is holding individuals and institutions responsible for their financial decisions and actions. Another is fairness, talking about ensuring equitable allocation of management of resources, avoiding favoritism or discrimination. And the last is objectivity, rather. And this is making decisions based on facts, regulations, and sound judgment rather than personal interest. Looking at the professionalism in public finance, it involves demonstrating competence, adherence to standard, and ethical conduct in all financial management activities. And key aspects of professionalism include competence, dealing with the fact that officers must possess the technical knowledge and skill which are required for budgeting, accounting, auditing, and financial resource reporting. Another key aspect is compliance with standards, and this deals with adhering with the IPSAS, government regulations, and relevant financial management laws. Another aspect is the continuous professional development, dealing with engaging in trainings and skill enhancements to keep up with emerging trends, technologies, and best practices. And the last is the professional conduct, dealing with demonstrating discipline, impartiality, and ethical behavior in handling public resources. The impact of this is that it builds public trust, reduces corruption, and supports good governance. The last, which we'll be discussing, the last issue to be discussed on is the transparency, accountability, and anti-corruption. Transparency, accountability, and anti-corruption. And for transparency, this is the openness and accessibility of government information. It is the openness and accessibility of government information. An example of this is open budgeting and public procurement disclosure. And for accountability, it is the obligation of officials to justify actions, use of use of resources. And the mechanisms that are involved are the legislative oversight, auditing, performance monitoring, and also for the for anti-corruption framework. These are policies and laws to prevent, detect, and punish corruption. An element of this anti-corruption agency like the Nigerian AFCC, ICPC, and strong internal control, whistleblowers, and protection also. These are very important elements under anti-corruption framework. In conclusion, the public sector accountant's role is expanding beyond traditional bookkeeping. Technology, sustainability, ethics, and transparency are no longer optional, but essential for credible and effective public financial management. Embracing these trends is crucial for building public trust, ensuring sustainable development, and achieving good governance. Thank you for going through the course together.